And interestingly, you've been, I wouldn't say full out positive, but leaning on some interest in Chinese names and Chinese economic stimulus that seems to be being promised more forcefully.
Hi, Caroline. Thanks for having me. So primarily, our strongest conviction is U.S. stocks, particularly because of the U.S. exceptionalism. I think this theme is still going to trade into the new year. And the fact that U.S. companies are just so much more profitable. So we still much prefer U.S. stocks versus the rest of the world. However, for Chinese stocks, I think, sentiment has been very depressed. I think, investors are still doubtful on the scale of the stimulus and whether it is going to work. So it is not that much of a consensus trade. I think this trade is having still a lot of resistance, and we feel that sentiment has been way too negative, and valuations are very cheap. There is a case to make that there could be more stimulus coming, and the fact that economic data is stabilizing. So I think there's a case for investors to diversify a bit into the Chinese stocks as well.
Small overweight in Asia, ex-Japan, on the back of that. What of, therefore, the daily deluge we get on ramping up China-US tensions? Yesterday, it was about NVIDIA being investigated by Chinese regulators. There's an ongoing narrative around Micron as well. How have you been trying to price that in?
Well, I have to say it is very difficult to price it in. I do believe that institutional investors have somewhat been more prepared this time, and you can see that in some of the sell-off in the trade-exposed stocks, for example, European ex-UK stocks, for instance. So I think investors have already been making some adjustments and thoughts on the trade tariff issue. It's very difficult to price in, but I guess some of that is already reflected in market. And overall speaking, our view is that the trade tariffs likely going to be a tit-for-tat and negotiation tactics. Doubtful that the full extent of the threat is going to be fully implemented, although it is acknowledged that some of that will be through. So keeping an eye on that, but it's not necessarily a deterrent to the ongoing rally in the U.S. equity market, for example.
Okay, so the likes of an NVIDIA that has got an enormous valuation continued to rally throughout 2024. Does that continue into 2025? Can we vindicate these valuations, the run-up that we've seen in stocks, like an 80% up on Oracle and 80% up on the listed depository notes of TSMC?
Yeah, you singled out NVIDIA there. I'm not going to make a specific comment, but this is obviously a great stock, huge profit margins, and still very strong guidance of the Blackwell chip architecture. And I think, this is a great company. Obviously, investors have this doubt on the high valuation. I think the rally can still go on, given that investors still like strong quality growth. So I would feel that investors will still be very much leaning on the semiconductor sector and then tech in general, large cap in general in the US. I also feel that investors are more shifting and rotating into more software related stocks instead of just the semis hardware. I think that makes sense because that there is likely to be more commercialization potential and realization as AI moves forward from the infrastructure build out to the inferencing and to the applications.